Welcome to The Explainer, where we break down the data and narratives driving the market. Today, we're looking at a token that's been making some pretty significant moves, Creditlink, or CDL. And yeah, when we say significant moves, we really mean it. Just look at this. In the last 30 days alone, CDL posted an impressive gain. Now, a jump like that isn't just random market noise. No way. It's a pretty clear signal that there's some strong, sustained interest from investors.
So the big question is, what's actually behind this surge? Is this just a flash in the pan, a bit of hype, or is there something more fundamental going on here? That's what we're going to unpack today. We'll get into the key factors and what it all could mean for you as a trader.
All right, first things first, let's get a really clear picture of Creditlink's recent performance and, what this asset is even all about.
So at its core, CDL is tackling one of the biggest and frankly most annoying challenges in DeFi, this whole idea of over-collateralization. Where you have to lock up way more money than you actually want to borrow. What Creditlink does is it uses AI to basically create a credit score for your wallet. This could totally change the game for DeFi lending, making it accessible without all that collateral.
Okay, now what's really interesting here is the data. You see the strong 30-day and 90-day gains, right? But then, look at that year-to-date number. It suggests this whole thing could be the start of a completely fresh cycle. It's not just the tail end of an old rally.
Okay, so let's move on and see how this all builds up, because behind these numbers, there are three really powerful narratives that are attracting all this investor attention.
First up is this really potent combination of AI and credit. And look, this isn't just about throwing around a buzzword. This is a real solution to a fundamental DeFi problem, and it's all about making lending way more efficient and accessible. This lines up perfectly with the massive trend of AI integration in finance.
Second, you've got the whole Web3 identity boom. As compliance gets more and more important in the crypto world, a solid on-chain identity solution like CDLs becomes incredibly valuable infrastructure. It really carves out its own space by focusing specifically on credit scoring, which sets it apart from other identity projects out there. And this part is awesome because it shows the third point, real, tangible utility that goes way beyond just speculation. We're talking about things like targeted airdrops to qualified users, or even letting your credit score give you more voting power in a DAO. That's a game changer.
So, okay, that's the what and the why. Now for the crucial part. How might a trader actually approach this asset based on everything we've seen?
Well, for traders, there are really two distinct ways to look at this. You've got your short-term tactical plays, right? And then you've got a longer-term strategy focused on accumulation and growth. It really depends on your style.
But hey, what if you just want to trade the bigger picture here? The good news is, you don't actually have to hold CDL to get in on this narrative.
And this is a really key takeaway for traders especially. You can get exposure to this same powerful trend, AI meeting DeFi, through other, much more liquid assets that might already be on your favorite exchange.
So here are some of the key tickers that really represent both the AI and DeFi sectors. You can use these to build a portfolio that's positioned perfectly for this growing theme.
And all of this leaves us with one final and pretty powerful question. Is this kind of technology not just another trend, but maybe the very tool that could finally bring decentralized finance into the mainstream for good?